Life is getting simpler day by day, right from opening a bank account to investing in financial products. Everything is done in just a few clicks, without any hassle going through clutter of forms. What's more, with an endeavor to make investors' lives simpler by helping them select a right product and take an informed investment decision, SEBI has issued a circular to rationalize and categorize open-ended mutual fund schemes in India to bring uniformity in schemes launched by different mutual fund houses by defining distinction in terms of asset allocation, investment strategy, etc., and standardizing the scheme categories and characteristics of each category. Accordingly, mutual funds would now be broadly classified as 1. Equity schemes, 2. Debt schemes, 3. Hybrid schemes, 4. Solution-oriented schemes, 5. Other schemes. UTI Mutual Fund has embraced these changes and have prepared a quick guide for its investors by dejargonizing complex terminologies and list of new scheme categorization at UTI Mutual Fund. Let's look at equity schemes in detail. Check out capitalization-based equity schemes categorization at UTI Mutual Funds, wherein large cap fund will predominantly invest minimum 80% of its total assets in large cap stocks. UTI Master Share Unit Scheme continues to be classified under this category. Large and mid cap fund will invest minimum 35% of its total assets each in large and mid cap stocks. UTI Core Equity Fund, previously known as UTI Top 100 Fund, is part of this category. Multi-cap fund will invest minimum 65% of its total assets across large cap, mid cap and small cap stocks. UTI Equity Fund, merging of UTI Blue Chip Flexi Cap Fund, is considered under this category. Mid cap fund will predominantly invest minimum 65% of its total assets in mid cap stocks. UTI Mid Cap Fund continues to be part of this category. Then, let's look at dividend yield-based scheme, wherein Dividend Yield Fund is a fund that invests a majority of its portfolio in dividend-yielding stocks. UTI Dividend Yield Fund continues to be classified under this category. Then, let's check out value investing-based scheme, wherein Value Fund will follow a value investment strategy that focuses on stocks which are trading below their intrinsic value. Intrinsic value may be ascertained by looking at factors such as, but not limited to, discounted cash flows, free cash flow yield, earnings yield, replacement value, book value, etc. UTI Value Opportunities Fund, previously known as UTI Opportunities Fund and merging of UTI Multi-Cap Fund, is considered under this category. Then, let's have a look at sectoral or thematic-based schemes that invest minimum 80% of its total assets in equities of particular sector or particular theme, wherein infrastructure theme shall invest in stocks directly or indirectly related to the infrastructure growth and development in India. UTI Infrastructure Fund continues to be classified under this category. MNC theme shall invest in stocks of multinational corporations, MNCs, that are generally characterized by operational and capital allocation efficiencies, brand or technology strengths, amongst others in their respective sectors. UTI MNC Fund continues to be part of this category. Lifestyle theme shall invest in sectors that benefits directly or indirectly from rising consumption, changing demographics, consumer aspirations and lifestyles. UTI India Lifestyle Fund continues to be classified under this category. Banking and finance sector shall invest in stocks of companies engaged in the banking, insurance and financial services related activities of the Indian economy. UTI Banking and Financial Services Fund, previously known as UTI Banking Sector Fund, continues to be part of this category. Healthcare sector shall invest in companies in the pharmaceutical and healthcare sector. UTI Healthcare Fund, previously known as UTI Pharma and Healthcare Fund, continues to be classified under this category. Transportation and logistics sector will invest in a combination of subsectors which will include auto ancillary, railways, ports, airports, airlines, roads, shipping, shipyards, courier services, logistics, and other ancillaries. UTI Transportation and Logistics Fund continues to be part of this category. Last category is a tax saving scheme, that is, Equity Linked Saving Scheme (ELSS) with a statutory lock-in of 3 years and provides tax benefit under Section 80C of the Income Tax Act. UTI Long-Term Equity Fund tax saving continues to be classified under this category. To summarize, let's take a quick look at the comprehensive list of overall restructuring at UTI Mutual Fund for equity schemes. With the latest categorization changes, your investment journey is now simplified. Go ahead and invest in a scheme of your choice.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.